Hello and welcome to this Tuesday's morning market briefing. We've got lots to talk about, but firstly, the US warns Iran attack on Israel could come this week, as well as that Elon Musk clashes with EU over X disinformation ahead of Donald Trump interview. We've got lots to talk about on the charts, also with lots happening on the economic calendar, but we'll come to that near the end, so make sure you stay around soon and see that. Before we get straight into it though, make sure to subscribe. The first article to talk about is to do with the US and this potential Iranian attack. Now, the US has now warned that Iran and its proxies may launch their anticipated attack on Israel this week. This comes following Israel's assassination of both Hamas's political leader and key Hezbollah commander. Now, of course, we covered those topics when, of course, they were breaking news, but some time has now, of course, passed since those assassinations have taken place. Now, of course, we've been covering this conflict though since the October the 7th attack, and since then we've seen certain things escalate, of course, especially regarding kind of tensions and kind of especially diplomatic efforts. We haven't really seen diplomatic efforts be achieved somewhat, but also in some ways we've seen tensions kind of calm down somewhat in certain areas. And of course, one of those kind of key areas have been to do with possibly the scale of conflict currently going on in Gaza. We know that there's been certain attempts already at ceasefire agreements. Ceasefire agreements have, of course, already fallen through though, but at the moment it seems like kind of the conflict within Gaza itself, the kind of ground conflict that was going on with the IDF and Hamas's kind of military wing, has somewhat calmed down now, whereas whilst we are seeing a continued air campaign, we're not seeing as much of those kind of early ground movements that maybe we were seeing back in November, December, and of course even maybe a few months ago. But ultimately, that does not mean that kind of the regional tensions have calmed down at all. In fact, we've kind of seen the opposite with these recent strikes on those kind of two key leaders, commanders for Iran's proxy network, have of course had massive ramifications across the entire region. We know, of course, that there's kind of always this proxy conflict going on within the Middle East between the kind of two sects of the kind of population there, but ultimately these recent strikes have ramped up any chances of a regional war, especially. Now, we have been warning, of course, of a regional war since the very start of the the kind of war that we're now seeing within Israel and Gaza, but ultimately we've never really seen tensions ramp up to this kind of level. We did, of course, see back and forth with missiles and drones between Iran and Israel. That was a massive escalation at the time, especially considering that Iran had never fired from their own territory drones or missiles or kind of any other kind of object at Israel from their own territory in their lifetime. So that was kind of a first, and that was a massive escalation at the time, because many then started to worry whether a regional war was breaking out. And we saw the same from Israel, of course. But ultimately, we saw nothing really come of that in the end. So whilst we were expecting something larger to come of that, we never really saw that play out. But why this seems to be different somewhat is, of course, because of those Israeli airstrikes, which will have massive effects now on that Iranian proxy network, which Iran really depends on to maintain its hold over the Middle East, it does seem like. As, of course, Israel did strike and kill Hamas's key political leader. That was a massive win for Israel, obviously, and a massive loss to the Iranian regime. And also, of course, the recent strike on the Hezbollah commander in southern Beirut obviously also massively hampers any of the efforts of Hezbollah within that region as well. As, of course, Hezbollah is kind of the key military force which Israel is kind of fearing at the moment, just because Hezbollah does sit, of course, on its northern border with Lebanon, and Hezbollah not only kind of hosts a massive array of weapons, especially missiles and drones, but also, of course, it holds a massive army, very much unlike what we've seen with Hamas, but a very organised army instead, and ultimately an organised army which is suspected to be within the hundreds of thousands. We also know, of course, that in Iraq and also Syria, certain other Shia militia groups have obviously aligned themselves with Hezbollah, and therefore would possibly be inclined to involve themselves should Hezbollah go to war with Israel. That's not excluding, of course, the Houthis in Yemen, which have been firing missiles and drones not only at Israel since October the 7th, but also commercial vessels and military vessels within the Red Sea and Gulf of Aden. As a result, we're kind of looking at a very scary regional conflict now, which I think many US diplomats are starting to kind of realize is very much on the border. And that's kind of what we're seeing here, with them warning that an Iranian attack on Israel could come this week. And of course, we don't know how that attack might look just yet. It could, of course, be like what we saw not too long ago with Iran launching airstrikes, drones and missiles at Israeli targets. But of course, it could also be a kind of larger regional war, where the entirety of Iran's proxy network, especially Hezbollah, then start to go to war with Israel, possibly in a ground campaign, which some are already fearing of. So of course we'll keep you updated on this topic, but it's going to be a very important one to keep your eyes on, as already it is affecting markets massively, especially the oil and gold markets, which of course we'll come to near the end, so make sure you stay around to see that period on the charts. With Iran having vowed revenge following the attacks. Many are especially worried since Hezbollah on the northern border of Israel have already been engaging in skirmishes with the IDF for the past 9 months or so. Hezbollah is a feared enemy of Israel since they hold an extremely large arsenal of weapons and have clearly stated that they would be prepared to use them against Israel should Iran give them the signal to attack in the same way that they might do with their other proxies. Then we could see a large regional war break out. Hezbollah has a steady and large supply of weaponry from Iran, as well as many years of combat experience in Syria, as well as over 100,000 troops, it does seem like. This creates a situation where, should war break out in the region, it's likely that air defense systems will be largely ineffective and the humanitarian fallout will be disastrous, with the White House having said that they've been preparing for what could be a significant set of attacks following the most recent specific public assessment of Iran. It was also noted that the Israeli forces were on peak alert and had increased their air patrols over Lebanon to detect threats. The US also announced that they were sending extra military assets to the region to help Israel. We'll, of course, as I said, keep you updated on the topic, but this is really one which you're also going to have to just keep looking at yourselves, just to stay on top of, the kind of news that's coming out from the region. And should anything break out or should anything happen, you'll be the first to know, and therefore you'll be able to react in the markets properly. But that's all to talk about in this article. Next article to talk about is to do with Elon Musk. And now, whilst we usually talk about Elon Musk and Donald Trump in a kind of separate topic, or separate topic, ultimately here we're combining the two, because Elon Musk and Donald Trump are currently doing an interview as I speak, actually, and ultimately, as this video will have come out in the morning of Tuesday, the interview will have taken place already, so definitely catch up on that topic. But this is a kind of interesting one to note, of course, because it does link to the kind of issues that Elon Musk is facing currently, with especially the political leadership in Europe, as well as, with that including, of course, the EU, as we're talking about in this article, but also in Britain, in, the United Kingdom, with Keir Starmer. So we know that there's some conflict now going on between the world's richest man and the kind of political figures in Europe. So this is creating a really interesting political climate, of course, and a very interesting kind of economic climate as well, as of course, should Elon Musk continue to run into issues with the political figures in Europe, one has to question how this might affect his businesses and, the way that they're situated in certain areas of Europe. As we know, of course, that Tesla hosts has a number of factories hosted within key European nations, especially Germany. And we also know, of course, X, his now social media platform formerly known as Twitter. That, of course, it has a massive impact or presence within Europe itself as well. And the kind of key warnings that we've always heard from the European Commission and that kind of thing is that basically, the EU still holds the right to withdraw X possibly from, withdraw X's access to the EU zone, and therefore, kind of restricts people's ability to use the social media platform, as it does seem like they are now increasingly worried about this topic of disinformation and possibly the political agenda that this tech billionaire holds. And ultimately, because this tech billionaire hosts a massive social media platform and has a very large voice on it, many are worried that this voice is too large possibly, and therefore can create a great deal of issues with his rhetoric, possibly spreading misinformation and that kind of thing. Now, Elon Musk has now clashed with the EU in the lead up to his planned interview with Donald Trump on Musk's own social media platform X. This argument broke out following Trump returning to the platform X, formerly known as Twitter, with numerous posts just hours before his expected interview with Elon, with the planned interview causing the EU Commissioner for Internal Markets to issue a dissemination of content regarding the interview. The commissioner said that the warning told Musk that he was to be reminded of the fact that he must be aware of his due diligence obligations regarding the Digital Services Act. Musk's recent rhetoric and actions on X was also apparently a key reason for the warning, as the commissioner wanted to avoid misinformation and disinformation on the platform and in Europe itself. So of course we'll keep you updated on this topic as things do things do come up. And of course, as I just said, once this video is out, basically this interview will have taken place. So this is kind of my way of saying, make sure you've catched up on that, make sure you know what's going on with that, as of course that will be affecting markets as well, especially any of Elon Musk's own kind of companies like Tesla, but also the way that people will possibly see Trump's presidency. So keep your eyes on this topic, very important indeed. That's all to talk about on the articles though. Next to talk about is the charts, where some interesting things are playing out, of course. Now, to begin with, like always, we're talking about the Dow Jones, we're talking about the US 30, where in fact not too much is happening to start off the week. So of course, yesterday we had the weekly market briefing where we were forecasting where things could go, and of course now it's been one day since markets have been open, and what we've seen play out on the Dow Jones is really not that much. We've seen price really stay where it opened on Monday, with price still sitting around those levels, those kind of key psychological levels near and around the 39,500 level. And of course that level is very key because it also lines up with the key liquidity zone and key resistance level up and around the 39,600 level, and also the 3820 Fibonacci retracement level. And it does seem like price is struggling to break above those levels, and instead it's just sitting below that. So the question will be, of course, whether price, because price is struggling to break higher, possibly we're now going to see a retracement to the downside, a further sell off to the downside, or in fact is this consolidation at the higher end of this kind of range that's formed, this kind of range, is the fact that price is consolidating at that resistance a sign that price is getting ready to break above, as it is accumulating all the momentum it needs to kind of break up higher? That's the question, of course, you have to answer yourselves, or at least just see play out, but we'll definitely keep you updated as things do kind of take place. Next to talk about though is the dollar, where just like the Dow Jones, not too much is happening, but I think it's still interesting to kind of note where the dollar is sitting, as of course, as I said in yesterday's weekly market briefing, we did note out these kind of key zones which price was probably going to interact with this week, and that price was currently interacting with. And that kind of key level to know was, of course, the 50% Fibonacci retracement level, which lined up with that key liquidity zone, which was only formed by the recent price action that we've seen play out. Now, of course, that level is acting as a very key area of resistance, it does seem like, with price struggling to break above it. And the question is, whether price will break. It's kind of an obvious question to ask, but it's whether price will break above that kind of key resistance level, or is price, reacting to that level, is failing to break above that level because there just isn't the bullish momentum to push higher, and therefore should we expect a sell-off to the downside, a continuation to the downside? So that's the kind of key question at the moment, as of course price has been on the downtrend really for the past month or two. So it's a question of whether we'll see that continue. Now, of course, any key economic data is important to note when we're looking at these kind of topics. And as for the US, we are receiving the US producer price inflation rate figure today. So possibly that's something you should definitely keep your eyes on to understand where the dollar could be going, but really not too much else to say. Definitely keep your eyes on the dollar though. Next to talk about is Euro USD, where really it has the least to talk about today out of all of these assets, as prices sitting within this kind of key liquidity zone. Obviously last week price reacted to that 50% Fibonacci retracement level, so it is a question of whether price will continue and move higher after reacting to that fib level. But yeah, not too much to say. Price is sitting within that area of liquidity. We'll see if price can break higher or not. Next to talk about though is pound yen, which is currently sitting at that kind of key liquidity zone that we noted out to start off the week, as that kind of key liquidity zone does line up with three other key fib levels of 3820, 6180, and the Fibonacci extension levels actually of minus 61.8. Now, of course, all of those levels are seemingly acting as a very key area of resistance for price, or at least bearish liquidity, which is allowing price to basically accumulate sell orders, possibly, should we then see a continuation to the downside. As of course, over the past month, really, we've seen an absolute collapse in price. As if I do draw this out, just to kind of remind you guys, we saw an entire 13.47% collapse within the pound yen market, driven by, of course, the yen, and this has driven price all the way back up to levels not seen since January of this year. So wiping out an entire 8 months really of continued bullish momentum. So the question is whether price will now react to this kind of level of liquidity on the upside, but ultimately the amount of volatility that we're seeing within the market is just absurd. So definitely look out for any key yen news, as that's really what's driving the market at the moment. Next to talk about though is of course Bitcoin, which just as I spoke about in yesterday's morning market briefing, is currently sitting below the $60,000 a Bitcoin mark, and therefore not too much to say. Obviously price did react to that 61.80 2 weeks ago now, and ultimately hasn't experienced a massive sell-off just yet after reacting to that level. Not 2 weeks ago, pardon me, last week. So ultimately we'll have to wait and see what does play out for today and for the rest of the week. But yeah, not too much to note so far. Next to talk about though is gold, which has in fact experienced some really interesting price action to start off the week. As I did note in yesterday's weekly market briefing, price was basically sitting at the very middle point of this range, of this kind of area between these two liquidity zones. And so ultimately we're trying to decide, will price go up or will price go down, as we always do. And ultimately what's played out is a massive bullish move to the upside. Now, as I did speculate at the start of this morning market briefing, it does seem like this is in line with what we're now hearing from the US regarding a potential war within the Middle East, as of course should a regional war break out, that could always bring in the US should anything kind of happen to do with that. We know that the US is moving military assets near to Israel in a kind of effort to ease tensions somehow. So that's always a question, of course. And obviously, gold is the safe haven asset of the world. And as a result, when people fear war, people buy gold, it does seem like. And as a result, prices at those all-time high levels and key resistance levels of around the kind of $2,480 an ounce level. So the question is whether price will now react to this level and sell off, as this is a key area of resistance, or is in fact the kind of fundamental pressure, is the pressure from the potential war in the Middle East too much, and so will price break above those all-time high levels and breach possibly up and into the $2,500 an ounce level. So we'll keep an eye on gold and keep you updated on that, but definitely keep your eyes on these key Fibonacci retracement levels should price sell off and then react to those levels before moving higher. Lastly to talk about though is oil, where just like gold, oil has seen a massive swing to the upside, as we did start off the week sitting at that 61.80. I did note how that was kind of irrelevant though, because price had somewhat breached it already, and that's kind of playing out now as we've seen price swing massively to the upside and back to that key resistance and liquidity level last seen around the 1st of August, and that's just the same as gold really. with this kind of increased worry about potential war in the Middle East driving oil price higher, as one would expect. The question is, though, like I previously said, whether price will now react to this higher area of liquidity and resistance, or in fact will we see price break higher before and not experience a retracement at all. So definitely keep your eyes on oil. That's all to talk about on the charts, though. Last to talk about, like always, is the economic calendar, where we're not receiving too much economic data today, but some very important economic data nonetheless. Now, firstly, we're seeing the Japanese producer price inflation figure, followed by the British unemployment rate figure and the Eurozone's economic sentiment figure. Followed by that, though, we're receiving the German economic sentiment figure, and to end off the day, we'll be receiving the US producer price inflation rate figure. But that's all to talk about on the economic calendar. We've covered lots in the articles, lots in the charts, and lots in the economic calendar. Hope you have a great trading day. But that's all from us at Wildwood Capital. Have a great one. See you later. Bye.